Hi everyone, very good evening and welcome back to Crack Grade B. So we were doing insurance for the regulatory bodies exam and we have already seen the basic terms and terminologies. Few of the basic terms we have already seen and few are yet to be seen. So let's start with those particular things. So yesterday we were able to complete reinsurance, right? We did talk about reinsurance and today we'll be talking about things like no claim bonus. So no claim bonus is such kind of things you can see in vehicle related insurance policies. So suppose these policies are issued for just say like a 1 year period, right? Like for from 1st April till 31st March, this policy of insurance has been issued. Now, if in this duration of 1 year, if you have not claimed anything, that means you have not registered any accident, you have not claimed anything from insurance company, that means insurance company has zero expense on your policy and they are just earning the premium. So for that, the insurance companies give bonus. So with the what kinds of policies this is attached with? This is attached mainly with vehicle insurance policies, right? In those policies, if during the whole year of your policy you have not claimed anything, then that because of that you will get a discount, also known as no claim bonus, right? So bonus is getting under the policy if the claim is not reported during the policy period. Now after that, intermediaries. Intermediaries, people or organization who sell insurance for insurance bringing together those who offer insurance protection and those who want to buy it. Intermediaries means your insurance agents. We already know about insurance agents. You might have seen various people who keep on selling insurance policies, right? Most of the times they sell life insurance policies, because I have seen in my experience, I have came across many people who are selling life insurance policies, right? So there are different kinds of people. Some sell the vehicle related policies, some deal with the life insurance policy, some do mix of that, right? So it totally depends. We call them as the intermediaries, right, or insurance agents. Now next is free look period. Now, what is this free look period is that if suppose you are buying an insurance term today and if you change your mind about it later. Now think about it. Suppose if I have bought an insurance policy, now I am into a double mind whether I should continue or not. So there is a free look period which is given to you. It is very similar, just like we have a return window in the online shopping. So whenever we do the online shopping, let's suppose on Myntra or any other Agio app or any other online website, they give us a time period, right? That in 15 days, if you return this particular item, then there will be no charges and your amount will be refunded. Now in this particular case, obviously amount refund wala to case nahi hai yahan pe, but what insurance company says that we are giving you a specific period, right? In this particular specific period, you can think whether you want to continue or you do not want to continue, right? Please listen to me very carefully. So whether you want to continue or whether you do not want to continue. But if you think that you do not want to continue, in that case, if you opt to go out, then we will not charge you any kind of penalty. Fine, what they say, if you choose to go out in that particular period, we will not charge you any penalty. So this is free look period. An insurance policy usually comes with a free look period, which is the duration within which you can terminate the policy without paying any penalties. And now this period, this differs from policy to policy, so we cannot generalize it. Now next is the claimant. Claimant means any person or entity requesting payment from an insurer or insurance company. If I have taken a policy on my vehicle and if my vehicle has met with an accident, I want a claim for that. So I am what? I am claimant. Earlier what I was called as insured person. Now the same person is a claimant also, because what I want claim for my vehicle. Next is deductible. Deductible is, see, if ever you have experienced, suppose if you take an insurance, for example, in related to vehicle related thing, suppose a loss has happened, right? Or if you have taken fire insurance, marine insurance, insurances of like that nature. Suppose I have taken an insurance onto my vehicle, right? Now my vehicle has met with an accident. So obviously I will give this vehicle for repair to the service company. Now there will be charges, there will be a bill that service company will make ki dear ma'am, these are your charges and the total charges for your vehicle repair has came to 5,000, right? So before the insurance company comes in, you have to pay the certain payment, right? You have to pay certain payment, and after that payment insurance company comes in and insurance company pays you the rest of the amount. So deductible is that particular percentage of the loss for which you are responsible and that portion of money which you have to deposit, right? So a deductible refers to the amount of money that you as insured you are required to pay before the insurance company takes over. For example, if you have a 500 deductible on your auto insurance policy, then if you are involved in that particular accident, then you will have to pay 500 rupees and insurance company will pay the rest of 4,500. Now there are some policies which does not involve, there is zero expense policies, but still in that policy you have to pay certain amount to get your insurance claim. Now next is the endorsement. Now endorsement is whenever you make any change in your insurance policy, that is called as endorsement. Suppose you have changed something or you have added something, right? Like we have read a term called as riders, right? We have read a term that was called as rider. So any addition, any deletion, any kind of change, that is called as endorsement in the insurance policy. These changes you can do at any time. First of all, you can do at the time of purchasing the policy. Also, you can do at the time of renewal. Right? So, at any time you can do. What is the endorsement? Under an insurance policy, it refers to the amendment. That means amendment means any kind of changes that you have made in existing policy. Right? Now, what is liability? Liability is, this refers to a legal obligation or responsibility one party has for causing the damage, injury or loss to the another party. Actually, what the loss has actually been incurred, this is called as liability. So if the accident has happened and I have taken an insurance policy, now the insurance company is liable for the amount of loss that has occurred to me. So yesterday someone was asking me the difference between the underwriter as well as what was the other person's name? Yes, actuary, right? So someone was asking me the difference between the actuary and underwriters. Although at that particular moment of time also I have already told the difference, but you have read actuary in detail yesterday and now this is the time to read the underwriters. So underwriter is a person who shares the risk, right? Who tells you, in case of share market, if you see, underwriter is the person who shares the risk, who takes your risk. In that particular case, underwriter says that if any loss happens to you, you can come up to me and take your loss back, right? In short, if your issue goes undersubscribed, then I am going to subscribe it in lieu of commission. That means underwriter charges a commission. Now, in case of insurance also, underwriter is a person who assesses that what is your insurance risk. Okay, suppose you are about to take a customer comes and that customer wants that as an insurance company I should insure his property. Fine. So I will have to see whether I should invest in that particular policy or not, or whether I should insure that particular policy or not. क्योंकि हर एक asset में risk होता है, right? There is a risk with every kind of asset. So underwriter is a person who classifies these particular risk for me. Obviously, he is going to charge the commission. He classifies these risks and he determines whether or not coverage should be provided. And if coverage will be provided, then at what rate. So these are the functions of underwriters. Now at the end of the day, underwriting is the profession which exists in different verticals, right? In share market, it is the person who charges a commission and covers your risk. He provides a kind of indirect insurance for your risk. Here he is the person who's again helping you in covering up your risk. He identifies, he assesses that what is the risk involved with the policy and whether you should cover this policy or not as an insurance company, right? So this is the work of underwriter, and such work is called as the underwriting. The process by which an insurance company examines the risk and determines whether the insurer should accept the risk or not, right? And for what period it should cover, at what rate it should cover, everything is given in the contract of in the process of underwriting. Next is grace period. Grace period is suppose I have taken a life insurance policy. Okay, now in that particular life insurance policy I have to pay the monthly premiums. What I have to pay? I have to pay a monthly premium. So in that particular case, what is going to happen? Suppose in any particular month I am not having enough money. I have to pay 20,000 rupees as my life insurance premium and I am not having enough money. So what I am going to do? I am going to say that dear insurance company, right now I am unable to pay the life insurance premium which was due on 30th April. So insurance company will say, no worries, we are giving you a 15 days grace period, right? We are giving you a 15 days grace period. If you have money in these 15 days, then please deposit with us, right? And if you will not have money even in these grace period, then your policy will lapse. Okay? So these are the this was the concept of grace period. Grace period is if you couldn't pay the renewal premium for your policy on time, life insurance company gives you an extension in the number of days after the premium payment due date. Grace period can be a period of 15 days in case of monthly premium payment mode and 30 days in case of annual premium payment mode. Yesterday also I have told you that the premium can be paid in various durations, right? It depends upon the capacity of the payer or the capacity of the insured person. Fine. So if the policy holder does not pay the premiums even before the end of grace period, the policy gets lapsed. The policy gets lapsed, right? If you are not able to. So the grace period is given to you so that you can pay your amount on time, and if you are not able to pay on time, then some additional time period is given to you. Now next is the lapsed policy. Obviously you did not pay the premium on the due date, as well as you did not pay the premium even after getting the grace period. So you were provided a time period of 15 days, additional 15 days to make your payment, but you failed to do that. So your policy will lapse. Whatever amount you have deposited till date will be lost. You will not be benefited out of anything. Okay? Suppose till date I have deposited 3 lakh rupees as my insurance premium. So that is total waste. I will not receive anything out of it. So lapsed policy, it is a default in the payment of premium which can result in the cancellation of policy. It is called as a lapsed policy. Suppose after a particular period of time, let's say after 2-3 months, if I want to start again this particular policy, can I do that? Absolutely yes, you can do that. So even if your policy has been lapsed, if after a certain period of time you want to restart this again, you can do that. But you have to remember that the time period which has passed, like the 3-4 months which has passed, you have to pay the premium for that, right? You have to pay the premium for that, the total premium, and after that your policy will restart. So lapsed policy, a default in the payment of premium, can result in the cancellation of policy. This is known as the lapsed policy. A grace period is provided by the insurance companies to make the payment. If the policyholder fails to make the payment during the period, the policy is considered to be lapsed. Right? So we have understood till this particular point. Let's move ahead. Surrender value. Now what happens in case of your life insurance policy? Why we are talking about life insurance policy? Because this is for a longer period of time, right? Suppose if I am taking an insurance on my life, this is going to be like, suppose for a long period of time, 15 years, 20 years, like that, 20, 25 years. So in that particular situation, what happens is, suppose I have deposited the monthly premium to this particular policy, fine, and after 4-5 years, if I want to surrender this policy means, see, one way to is that I do not have the premium, I do not have premium to pay, so obviously my policy is going to lapse, everything is finished and I'll not get any benefit out of it, कोई benefit मुझे नहीं मिलेगा. But in case of surrender value, what happens is, listen to me very, very carefully. So if the policy holder decides to discontinue the plan, fine, in this particular case, whatever amount I have deposited till date, I will get a benefit out of that. So mostly your insurance company says, for example, if you are surrendering the policy after 3 years, after 4 years, after 5 years, after 6 years, 7 years, like that, right? So year wise calculation is provided. So if you are surrendering a policy after depositing premium for 3 years or for 4 years, then there is a surrender value which is written. Like if I am surrendering the policy after 3 years, then I will get 1,80,000 rupees. If after 4 years, 1,90,000 rupees, right? Like that. So this is pre-decided in the contract of insurance. This is called as surrender value. This is the, what you can say, a more good way, a more sophisticated way. If the policyholder decides to discontinue the plan before the maturity age, the life insurance company pays an amount to the policyholder as per the policy document. So surrender value is already written in the policy document. It is decided beforehand. Okay. Next is the loss ratio. Now this is an interesting thing. How loss ratio is calculated? So loss ratio is equal to what are the claims paid divided by, for that particular policy, what is the premium received by you. Right? This is called as your loss ratio. Claims paid divided by premiums received into 100%. That means if I am an insurance company and if I have issued a particular policy, then what is the income that I am getting out of such policy and what is the expense that I have incurred, right? So if this ratio should be less. If this is lesser than 100, then obviously I am into, as an insurance company, I am into profit. If this ratio is over than 100%, then obviously as an insurance company, I am into losses. Fine. So this is called as the loss ratio. So losses divided by the premiums paid. The numerator can be losses incurred or losses paid, and the denominator can be the earned premium or written premiums, depending on what use is going to be made on the loss ratio. Next is Keyman insurance policy. Fine. Keyman insurance policy, a life insurance policy which is taken by a person on the life of another person, right? Who is or was his employee connected to his business in any manner whatsoever. So in this particular case, see what is going to happen. Keyman insurance policy is, suppose I have a business, right? into my business there is a CFO which I have appoint, Chief Financial Officer I have appoint. Now existence of that particular CFO, or you can also call it as, or CEO, Chief Executive Office, he is very important for me, right? Very important for my business. If anything happens to that particular person, if anything happens to that particular person, then in that particular case my company will be into losses, right? My company will be into losses. So that is why many of the times the companies do take a Keyman insurance policy. That means the person who is very important for their business, on the life of such person the companies take the insurance policies. Next is maturity claim. So the payment to the policy holder at the end of stipulated term of policy is called as a maturity claim. Now in case of life insurance policy, so there is a cover, right? Insurance cover or the policy amount which we also know it as. So suppose I have taken a life insurance policy, on after 25 years this policy promises that it is going to pay me 2 crore rupees, right? So policy cover is 2 crores. It is also known as the maturity claim. So this is the payment which is made to the policy holder at the end of stipulated term of policy. The same thing, your insurance cover, your policy cover or your maturity claims, they are the same thing. Next is reinstatement. Reinstatement, I already told you, just now we discussed about a lapsed policy. Lapsed policy means the time period of that particular policy has, you were not able to pay the premium for that particular policy. That is called as the lapsed policy. You did not pay the premium on the due date, as well as you failed to pay the premium even after giving you the grace period, right? Grace period of 15 days or 30 days, whatever the case may be. So if you fail to pay the amount, after that your policy gets lapsed, but you have the option to restart that policy again, and it is called as the reinstatement. What it is called as? Reinstatement. So restoration of a lapsed policy to in force status. It can only occur after the expiration of grace period. Obviously, if you have not, suppose I had to pay the premium on 30th April. If I was not able to pay on 30th April, and even after 15 days, suppose I was not able to pay even after 15th day of May, then this option of reinstatement will arise. So company may require the evidence of insurability, right? And will always require the payment of total of past due premium. Whatever the payment is due, for which the period for which you did not continue the insurance policy, you have to deposit the total premium with the company. Okay? Now just wait for a second. Yes. So now next term is bank assurance. Bank assurance means when insurance product is sold through banks. Fine. This is called as bank assurance. Next is actuary. Actuary we have already seen. See, actuaries, they can work as an employee also. Insurance companies appoint these actuaries, they take these actuaries as their employees, as well as they also can choose to work as consultants. So I am telling you that in practical life, consultant means a kind of freelancer who works for any insurance company. right? So actuary can work in both kinds of positions. Who is an actuary? Yesterday also I explained about this. So a person who is having the expertise in the fields of economics, statistics as well as the mathematics, which helps in risk assessment and estimation of premium etc. for an insurance business, right? Now next is, what is lapse ratio? So I would like to suggest you that please have an understanding about these lapse ratios as well as the loss ratio, that for which we did talk about just few moments back. What is lapse ratio? So lapse ratio, it is the number of life insurance policies which have lapsed within a given period to the number of policies in force at the beginning of that particular period, right? So here we want to see that what are the number of policies in an insurance company which are currently operating, and we also want to see that what is the number of insurance policies which have lapsed during the current period. See, obviously lapsing of policies is not a good measure for an insurance company, because as an insurance company you are losing out on premium. Claims तो चलो कभी कभी arise होते हैं, it is a matter of luck, matter of situation, but the premium is the constant source of income for an insurance company. So it is not a good thing if your lapse ratio is greater. Okay, keeping a lapse ratio at a lower percentages is always a healthy sign for an insurance company. Next is agent. We have already seen, also called as intermediaries. Who is an agent? An individual who sells and provides the services of insurance policies. Next is the claim. A demand made by the insured or the insured beneficiaries for the payment of benefits as provided by the policy. Nothing to understand over here. Next is the commission. So commission, it is the fee which is paid to the agent or the insurance salesperson as the percentage of the policy premium. Very, very important thing. See, sometimes we do confuse over here. We all know that insurance agent or intermediaries, they are paid the commission because they bring business to the insurance company, they bring clients to the insurance company. But on what basis commission is paid to them? So commission is paid to them on the percentages of the policy premium, right? Commission is paid to them on the percentage of policy premium. I hope this is clear. Next is the waiting period. Waiting period, this is the period of time that must pass before your cover comes into effect. During this time, you are unable to claim, right? So this we have already studied yesterday also. Next is indemnity insurance. See, indemnity insurance, what happens is, suppose you are working as a person who is providing the client related services. I did not get, what do you want to ask? Yes, I cover the lectures in the same sequence. Why will not I? Because the notes is given like that, so I have to cover it like that. I did not get your specific query first of all. What do you want to ask? Fine, great. So next is indemnity insurance. So suppose you are a person and you are providing the client related services, right? You have suppose you are a consultant, you are an investment advisory person, or you are doing you are providing contracts like derivatives. You are an intermediary who is dealing in the financial contracts, right? So tomorrow what can happen? One of your client can come and he can say that you did not mention these things in the contract and I am going to file a case against you, right? So because of the nature of the services that you provide, because of that particular situation, you had to pay, you might have to pay the claim amount to that particular client. Now what I am trying to say, let's depict it by using a diagram. See over here, suppose you are a what you can say, a broker. You might be having your clients. Now to one of the client you have provided a derivative contract. Fine, you have provided a derivative contract. Now in this particular contract, because of your negligence, there was some fault of yours, because of that client filed a case on you. Client filed a court case on you and you had to pay a claim to the client. Why? Because obviously while framing this particular contract of derivatives, you were at mistake. You have done some mistake. It might so happen that you have done a mistake or your employee might have done a mistake. Anyone can do. Fine. So because of this mistake, the client has suffered a loss and client has given a court case onto you. So such kind of persons who deal with the clients, who have such kind of business, it is important for them that they should take indemnity insurance, right? This is also called as a professional insurance. So such person insures themselves against such kind of risk which can arise by dealing with the clients. So I hope now you have got the point. See, indemnity insurance, it is an insurance policy designated to protect the professionals and business owners when they are found at fault for a specific event such as misjudgment, right? Claimant, a person who makes an insurance claim. Next is penetration rate. Penetration rate, it indicates the level of development of insurance sector in a country. It is around 4% in India. So yesterday also I was telling you that in India the insurance penetration levels are too low. So in our country, as a measure of population, just 4% is the insurance penetration rate, right, out of our total population, and it is way less. That means in India insurance has got too much potential. You can ask yourself, I hope that you all are major, but yes, so I hope you all are major, but in that particular case, please ask yourself whether you have taken any kind of life insurance policy onto your name. Vehicle insurance related thing we all do, right? That is the given case. But have we taken any policy on our lives? So this is the case. The answer is lying with you. Like most of us, we do not take the life insurance policies until and unless we want to save taxes, right? Next is yeah, that is also correct. But I guess insurance is a good product if you see from various angles in the taxation as well as the benefits of it. Now next is vesting date. It is the date from which the annuity holder starts receiving the policy benefits of a regular stream of income. See, correct. There is lack of awareness onto it. But yes, if I am thinking that as many people who are watching this particular lecture, they might get a little enlightened with the concept of insurance, and I hope that you start earning as soon as possible so that you can invest in insurances as well, because that is a good source. Because this gives you benefit. I don't think that it is a loss making product. No, it is not. It is always beneficial, and there are so many options in today's time. There are so many different options. Fine. So one is your vesting date. Vesting date means, see, you might have seen different kinds of life insurance policies. I also wish that. So what I wanted to say in wasting date, see, in case of life insurance policies, there are so many products, correct? Number one thing, there are products which give you a fixed amount at the maturity date. That is a different thing. There are other products as well which give you income from your initial early stages as well. Suppose if you have attained a age of 50 years, then they will start giving you the pension, a monthly annuity amount, right? So the day from which the annuity holder starts getting the benefit of a regular stream of income. Regular stream of income means monthly payment is started flowing from the insurance company. That is called as the vesting date. Next is appointee. So suppose there is a person which I have appointed as a nominee. That person is a minor, lesser than an 18 years of age. So there should be a person who is the appointee of that particular minor. That means this appointee will act on behalf of minor. When a nominee is a minor, there needs another person who should assist the minor person. See, what happens is, insurance in itself, it is quite a large part of our economy, right? So we always want a specific body. I know in every kind of, like you are saying that pension funds should come under the PFRDA, that thing is right, but these kind of insurance policies, they are not basically a pension source, right? Pension is defined as something else, and these policies of insurance, they are defined something else. You can say that yes, there is some amount of similarity, both the kinds of product, they are there is some kind of interlinkages, but we can not totally call it as a pension. Fine, that is why it is coming under the IRDAI. I have just said that it is not totally a pension source, but this is a composite type of product which is developed by a insurance company. So insurance company says that yes, at the full maturity amount we will be giving you some amount, but we understand that you might need a specific sum of amount starting from a particular age. So they are giving just you a composite product, but at the end of the day it is having a features of insurance only. Okay. Next is lock-in period. Oh, appointee. Appointee is a person who acts as a caretaker of the policy benefits for the nominee until he or she attains the age of 18 years. Next is lock-in period. Certain insurance policies also come with the investment benefits. These dual benefit insurance policies have a condition of lock-in period. According to this, during the lock-in period, investor insurer is not allowed to withdraw the invested amount. Now, see what I have told you, nowadays insurance companies, they are coming up with the hybrid kind of policies. Hybrid means that this policy is having the benefit of insurance as well and having the benefits of investments as well. You can do we will be doing the investments and you will get the returns out of those investments. Fine. So such investment plus insurance kind of policies, there is a time limit. Yes. Let's not make it difficult for other people. We will be discussing about them later on as well, as we will study the higher topics, but as of now let's keep it pretty simple. Okay, but I appreciate that you have that much amount of knowledge. It's great always when your students are also that much capable of understanding the topics beforehand. Now let's come back to the topic. So lock-in period means that suppose if you are taking such kind of hybrid insurance policies where you are having the dual benefits of insurances as well as the investment income, in that particular case you cannot withdraw anything, right? You cannot withdraw the invested amount for a particular period of time. That is called as the lock-in period. Next is the nominee. We have already understood who the nominee is. Nominee refers to a person who is entitled to receive the policy benefits in this situation when policy owner meets an unforeseen events and dies. So we all understand the concept of nominee, right? There is nothing to make you understand over here. Next, regular premiums. So regular premium is the amount that the insured person pays to the insurance company on a regular basis. Single premium is the one time payment. See, suppose I have already told you the payment of premium also depends on the choices you make, the financial capacity you have. So I suppose I am a salaried person, right? So every month basis premium will be good for me. If I pay the premium month on month wise, that will be fine for me. But if suppose there is a businessman, right, and that businessman thinks that if I pay the premium once in a year, that will be great. Now we have another person who's a millionaire. So that person says that take whatever premium you have to take in one go and provide me the protection for these many years, right? So this is called as a single premium. Single premium is the one-time payment to be paid to insurance provider as specified in the policy terms before the plan's commencement date. Next is the sum assured. We already know this is the promised sum of money. Next is arson, the willful and malicious burning of property, often with criminal intent. So these kinds of terms, they are being used in your claims settlement process, right? So whenever the claims assessment happens, suppose your vehicle has met with an accident and the person surveyor comes and he sees that okay, what is the loss, what is the amount of loss that has happened, he values, he checks out the situation, right? All of such things. So such kind of terms are used in such situation. Arson is the willful burning of the property with a criminal intent. Next, assignment, the legal transfer of one person's interest in an insurance policy to another person. For example, suppose I am selling my vehicle. I had a car and I no longer want to use it. I want to sell it, right? I want to purchase a new car. Now this particular car, this old car which I have sold to another person, my vehicle insurance will transfer to that person, correct? So that is called as the assignment. Now is co-insurance. This is a means of spreading the risk on larger insurance between two or more direct insurers. Two or more direct insurers. See, there is a difference between the, what you can say, there is a difference between the reinsurance and co-insurance. So I'll explain this particular thing. Understand this. Suppose Mr. Elon Musk, he wants to open a Tesla factory in India, right? He wants to open a Tesla factory in India. For that particular Tesla factory, he wants an insurance cover of 1000 crore because of the assets which has been employed in that particular premises. He wants a insurance cover of 1000 crores. He approaches an insurance company ABC Limited. He approaches an insurance company ABC Limited, right? And he says that I want this cover. So ABC Limited was not having the enough capacity, but still ABC Limited says that okay, fine, we will cover this. Fine, ABC Limited says we will cover this. Now in the back end, ABC also brings in XYZ Limited as well as PQR Limited. Fine. ABC Limited says to them that listen, I am going to cover 60% of this. You will be covering 20% of this and You will be covering 20% of this. Fine. Customer came directly to whom? ABC Limited. So this is the direct business for ABC. For both these insurance companies, this business of Tesla is a reinsurance business because the customer did not came directly to them but through another insurance company. So this particular process will be called as reinsurance, where the ABC Limited has appointed, means has brought in XYZ and PQR also to share the risk. Yes, good. So seeding company is ABC Limited and reinsurers are XYZ and PQR. This is the concept of reinsurance. Now what is co-insurance? Now in this particular example, suppose if Tesla wants an insurance cover of 1000 crores, right? But in that particular case, it appoints three different companies, ABC, PQR and XYZ. And Tesla says that all these three companies will be insuring the property. Fine. So this is called as co-insurance. Co-insurance means the other two companies are not getting the business because of one company. What was happening in the case of reinsurance, right? Here, all three companies have got the direct business from the customer itself. All three companies have got the direct business from the customer itself, right? This is the concept of co-insurance. I hope you did understood the difference between reinsurance and co-insurance, and this is it that I want to cover in today's class. We'll be covering many other topics in our tomorrow's class. So thank you so much. I hope you did found the lecture useful for you, and if you did, then please do not forget to like this video. Thank you.